Good afternoon. This is Deborah Pratt Johnson Burns. I'm the founder, chief prosperity officer, educator, and mentor at Literacy to Legacy Mentors, Reframing Your Financial Future. Thank you so much for joining us today. The topic today is how to successfully invest in a high inflation interest rate environment. First and foremost, I'd like to review some of the fundamentals that I taught last Wednesday on how to become a more informed and more confident investor. First and foremost, it's important to look at these fundamentals. First, what are your goals? Why are you investing in the first place? Is it for capital, meaning growth and income? Is it for expenses, buying a new home, paying for a wedding, retirement planning, etc.? So determine what your why is for investing, and then determine what amount you're investing from an allocation standpoint. Determine your long-term horizon. For instance, if you're 20, your goals are very different than they are when you're 60. And what amount are you willing to invest that you can actually afford to lose? Because as we know, past performance is no guarantee of future results. So look at it in a very realistic, sober view and determine, okay, I'm going into the market, or I'm in the market, I'm going to do some things differently, I want to be more successful, etc. So let's look at diversification. What industries are you in that are growth industries that are doing well in today's high inflation interest rate market? So for instance, markets and industries like shipping, international shipping in particular, are doing quite well because they are actually benefiting not only from the COVID-19 restrictions in ports around the world that are being closed or temporarily closed, et cetera, and they're rerouting all of their carriers and containers, but some in particular are doing better than others, and you can capitalize on that. Secondly, for the time being, of course, everything is cyclical. The oil industry and oil and gas and the pipeline industry that relates to it are also doing very well at this point in time in the market. So those are two examples of two industries that are doing very well in a very volatile market, and they may be industries you are interested in and may wish to take a closer look at. I also refer to a number of professional level resources that I purchased through a subscription. They're annual subscriptions, and they run from $250 to $1,500 or more, depending on what pro level you're determining you'd like to have. Specifically, those resources are Seeking Alpha. There are a number of expert writers, investors, as well as analysts who write columns on a plethora of companies and industries who are tremendously helpful in giving you a perspective on a company from a short and long-term perspective. They also provide futures information, which, as you may know, the US stock market is open from 9:30 in the morning to close of market at 4 p.m. Eastern. The markets, however, continue to trade around the world. So what you'd like to do is take a look at the futures, and Seeking Alpha on the app actually provides that information. So you can determine the next day, am I going to buy this stock? Am I going to hold it? Am I going to sell it? What am I going to do based on the future markets? And they're pretty accurate based on market open at 9:30 in the morning, Monday through Friday. Secondly, there's another resource that is an aggregate resource on a number of experts who are analysts, certified financial analysts, CFAs. And they are evaluating stocks on a number of different facets. And that particular resource is called Tip Ranks. So you can find them on the web as well. Thirdly, there's a wonderful resource called Zacks, and they rate stocks on their rating system, and they're very accurate. So you can also look into Zacks to see, is my stock A rated? Does Zacks like it? And then you can go and compare all of the others to each other and then make an informed decision. Of course, there are many other resources that you can use, like Morningstar and Barron's, of course, and the Wall Street Journal. I believe, and we believe here at Burns Communications and Literacy to Legacy Mentors, that it's important to look at all of the top resources and then make your informed decision. Do some cross examination and cross comparison, And then and only then should you make the decision to actually put the money in the market. Today, I want to share with you a little bit about these success strategies that we've used to actually invest and be profitable in any market, which I know sounds somewhat unbelievable, but true. So these factors are incredibly important to consider. One is look at a company's historical perspective. So that is done by comparing their PE, which is their price to earnings ratio. Typically, a company with a PE under 30 is a relatively potentially undervalued and stable company. Anything higher than 30, investors are projecting that they're either going to be a high earner in the future from a forecasting standpoint, or they're actually going to have outstanding earnings, or they're wildly overvalued. So it could be a combination of both. As I said, good to look at a PE under 30. And the lower the PE, the more stable and the more undervalued the company is, which is a company you want to get into because you want to be on the growth trajectory on their way up and travel on that trajectory with them. So the other is it's basically to determine their profitability. And that is a pricing strategy as well. So you look at their valuation and then you look at their profitability. So that's also an important factor. The third factor is look at what the competitors are doing. And in particular on Seeking Alpha, what are the competitors doing that these particular analysts and writers are writing about? Is one company have an edge over another, for instance, and why? And look at the time horizon on when these articles have been written, because the market is wildly cyclical. And what could be very favorable in January is a very different story today in March. So it's important to put things in perspective. The other thing that's really important, and it's important in all markets, and that is leave your emotions and your ego at the door. Emotions have no place in the markets. They are a very serious endeavor, and it's important to take it as seriously as you possibly can, because this is hard-earned revenue from your job, your career, your income sources, whether they be from real estate or other investing you may be doing. This is serious money and it's serious business. So do take it as soberly as you possibly can. Also looking at industries, they can also be cyclical. So for instance, industries, as I said, like oil and gas, for instance, they're going to be very cyclical because it's based on Brent crude, it's based on macroeconomics, it's based on what's going on in the global economy, in particular with the war, unfortunately, in Ukraine, what's happening in the capital markets globally. There are a lot of factors. So it's incredibly important to look at what are these industries that are really stable, non-cyclical per se, like the P&G, for instance, Procter & Gamble, consumables, consumer products. Look at the industries that people need to use all the time. Paper products, for instance, things along those lines, consumables, consumer goods. Those are very stable companies. Now, another consideration in your strategy to become very successful in high inflation markets is let's take a look at dividends. Now, in my day, frankly, when growing up, my mom used to live on dividends, and I thought, well, how super cool is that and interesting? How'd she do that? She was a maverick in her time and way ahead of her time. And what she shared was, it is important to have a significant holding in a particular company and to buy and hold. Now, traditionally, buy and hold is the best strategy because companies typically grow over time, and you must be immensely patient. And that's another very important virtue in investing, in addition to being non-emotional. So dividends pay a percentage to shareholders of record quarterly, and some pay on a monthly basis. The way to really evaluate and gauge what types of dividends are these companies paying? Why are they paying them? And what is the percentage of earnings they're paying to shareholders? So for instance, if you're in a high inflation market like we are right now, it's 8%. So you've got to look at dividends and growth, but dividends in particular, that's going to yield higher than 8%, right? So you look and Google, look at your Seeking Alpha, your Tip Ranks, your Barron's, your Wall Street Journal, and look at those stocks that are actually paying out for a long period of time a very sizable dividend around 8 to 10, 10 to 15, 15 to 20%. Now, some of you in the audience might think, Deborah Burns, what are you saying? How could I possibly get a dividend of like 15 to 20%? Well, I can personally attest to the fact that they're out there, they're available, and they're payable, and you definitely want to be thinking about those in your portfolio. Now, you could have a full growth and income portfolio. You could have income being a portion of it. It all, again, back to your needs of what are your goals? Would you have short-term goals that you may need that capital for? Do you have long-term goals that you may need that capital for? So it's really up to your specific situation and your specific financial goals individually with your family and your, partner, husband, wife, et cetera. So that's also a very important consideration. The one thing, which is another resource you may want to look into, is it's called SURE, as in SURE, SURE Dividend. And they characterize dividends by categories. So we know in the industry that dividends that have been paying, for instance, companies that have been paying dividends over 50 years, they've never cut the dividend, they keep increasing the dividend. Those are called dividend kings. We love them. They're not paying enormous dividends, but the good news is they're strong and steady, and they've been paying them for a very long period of time. The next category is called dividend aristocrats. They have been paying dividends for the past 25 years, and they've been paying them consistently over time without dividend cuts. And that's a very important consideration. Then the next category are called champions and or contenders, and they are 15 years, have been paying shareholders dividends regularly, uninterruptedly, et cetera. So those are the categories of dividends you would like to look into in that resource called SURE Dividend. And then you can determine, based on all of the other criteria I have suggested, so are these the types of companies I want to be invested in, and how long and when and what industries are they in, et cetera? There's a lot of considerations here. But I think the most important thing to remember is they are paid quarterly, and they are considered ordinary income if you are putting these investments in a taxable brokerage account. What that means is that any buy and sell becomes either a capital gain or a capital loss in your portfolio, as well as a dividend, which is considered ordinary income. So whatever your tax bracket is, it will be added to your regular income as a salaried worker, as a 1099, however you construct your working environment, and it will just add up to that top line number, which is your AGI, adjusted gross. And then they'll determine what are your taxes on all of those respective monies. So that's a very serious consideration. I personally, as well as many of my colleagues and my peers, we like to invest aggressively in our IRA, in our 401k, if that's applicable, as well as our Roth. So keep that in mind, that when you invest in a non-taxable account, the only time it's taxed is when you take it out of the account. And that's the case for IRAs and 401ks. That is not the case for the Roth IRA. So keep that in mind as well. What's really important too here is that there are so many resources available, but I truly believe, having done this now as a self-directed and successful, profitable investor for 35 years, I only use professional resources to validate what I have put to paper and have made a plan for. And, investing is not luck. Investing is not gambling. And it requires a serious plan. So why don't you think about, when you are thinking about doing this, or if you're interested in rebalancing your account per se, that take all of this into consideration. Because again, as I said before, this is hard-earned income and hard-earned revenue, and you do not want to make any missteps along the way. So should you be interested in learning more about investing, about spending plans, about earning plans, about how to get raises at your job? I've run 2 multi-million-dollar companies that I built. I'm able and available and delighted to help you along your financial freedom path. I can be reached at literacy-to-legacy-mentors.net, and you hit the Get Started button, and I will provide you with a one-time financial freedom education complimentary consultation for whatever challenges or opportunities you would like to review. I also provide on my website mentoring packages so that any particular endeavor you're involved in, I will be able to guide you expertly through making smart and informed decisions. I also, as a business owner and a provider of brand and business services to my clients for the past 15 years this year, I also offer consulting services to small to mid-sized businesses. I have had the good fortune to work with CEOs most of my career, and I have helped them to become more relevant and profitable. And I would love to have an opportunity to help you to do that as well. So do look on my website under mentoring packages, under consulting packages, and then under Get Started. That is where you get the complimentary consultation. Secondly, I want to share with you about my financial freedom education and entrepreneur spotlight series, of which this is part. I have experts from the industries of trust and estate law, personal and business finance, insurance, as well as higher education, college financial aid. These experts are speaking to you from 20 to 25 to 30 years of experience, and they are my strategic partners in my company. I would love to have you join us at a future event when you will hear from them on a variety of topics in a Q&A power half-hour format. So I look forward to having you join us at future events on my Financial Future Literacy program. If you will, just look on my events tab on my website, and you'll see all of my respective speakers that are scheduled for the next several months. I'm also going to be hosting with my colleague, Debbie Lake, a wonderful in-person retreat at our home in Vermont. So I am going to be announcing that shortly. We're just trying to firm up the date. The agenda and the schedule is already on my website, and you'll scroll down on my events page and you will see that. And we'd love to have you join us, of course, first come, first serve. It is an all-day affair on a Saturday, sometime likely in July. So I hope we'll see you there. And I thank you so much for attending today. I hope that you've learned a tremendous amount and taken wonderful notes. And if you have any questions whatsoever, please feel free to reach out to me, Deborah at literacy-to-legacy-mentors.net. And I'd be happy to answer any questions you may have. So I'm delighted to have you join us today. I hope you have a wonderful week. Happy spring, happy Easter coming, and to your financial future. All the best. Bye.